With many major news events just around the corner, will Bitcoin have the strength to continue higher, or are we going to see a short-term correction? What are the macro charts suggesting, and why is the 3-day Gaussian channel so important? Let's go ahead and jump in. Okay, MegaWhale team, welcome back to the channel. Thank you for tuning in. I hope you're all having an absolutely fantastic day today. In today's video, we are taking a look at the macro charts, the 3-day Gaussian channel, the daily charts, the short-term price action, and the upcoming economic news. By the end of today's video, you'll have a detailed and well-rounded understanding of not only what is happening, but what to expect next. Before we do get into it, smash that like button, hit that comment button, and subscribe to the channel. We post daily videos of Bitcoin focusing on the facts, the data, the technical, and the structural information. No hype, no BS, no emotion, pure raw TA. If that is the kind of content you were interested in, join us on Telegram. It is the first link down below. You will get access to charts, updates, videos, educational posts, news events, and everything you need to stay in the loop of cryptocurrency with Bitcoin and the relevant economic news. If you are interested in taking your trading to the next level, you can join us in VIP. We post trading setups with exact entry prices, exact targets, exact stop losses, trade justification, and exclusive analysis. Every single trade we post is explained with absolute precision, making it easy to follow and understand. You can also get access to our trading chart and education chat, our general chat, our news chat, our help, and our daily video chat. To get access to all of that, go ahead and contact me in the pinned comment of the free channel by clicking my name or these links for more information. The link number 1 will take you to our entire trading track record, and link number 2 showing you a video about VIP. And additionally, if you do want 15% off all of your trading fees for life, you can sign up to our links via the pinned comment or the description down below to BitGap, BitUnix, and BingX for 15% off your trading fees. Let's go ahead, guys, and jump into a video. So taking a look at the price action. Over the past 24 hours, Bitcoin has done pretty much what we talked about in yesterday's video. We discussed the possibility for a correction for Bitcoin, which we absolutely saw perfectly. A correction right into that short-term support level at around 57.7k to 7.3 thousand. We did see Bitcoin touch the level absolutely perfectly, and then we saw a 5.4% rally toward the upside. So a pretty significant bounce there for Bitcoin. 5.4% is by no means a small move for Bitcoin, around about a $3,500 move. So if you did catch that bottom over here, congratulations, you caught a fantastic move. But looking at the last 24 hours of price action, Bitcoin has been considerably choppy. It has been very choppy. We've seen multiple large, 30-minute, 1-hour candles up and down, back down to his liquidity pockets, back up to the $60,000 region, really struggling to make any sort of decisive move. The only decisive move we have now is that this level at 57.7 to 57.3 has officially been retested as a support region, and therefore we do expect an eventual continuation higher. There is a risk, however, because moving into the next 48 hours, we do have some major economic news, and we'll discuss that in a moment. But before we talk more about Bitcoin, let's get into the market data. Taking a look at the market data, 24-hour volume is up 60% at 165 billion. 24-hour liquidation is not too far behind, up 16% at 175 million. Of the 175 million in liquidations, 83 million have come from long positions and 92 million have come from short positions. Once more, showing us just how choppy that price action has been. Moving over to the economic news, we can see, guys, with the economic news, we have got PPI data coming out in around 12 hours. PPI data, Producer Price Index, is a good indication of inflation, is a leading indicator for inflation, because generally when PPI increases, the costs for producers to produce materials or produce goods and services start to increase, and those increase in costs gets pushed down to the consumer. So generally when we see PPI increase, it's an indication that in a later date we could see inflation increase as well. Of course, the PPI data by itself is not significant enough. We generally need to see multiple months of increasing PPI to have any sort of inflect on inflation. The same goes with our inflation data. This is going to be tomorrow in about 32 hours or whatever it's going to be, 32 hours. We do have our inflation data. Once more, looking at the inflation data, this is going to be quite significant as it can shift the probabilities between the expected interest rate decision. And as we can see, looking at the current interest rate projections, there's a 50% probability of a 25 basis point drop and a 50% probability of a 50 basis point drop. So we see a significant shift in the expectations with the CPI data. We could see the expectations in regards to interest rates change. And if we see the expectations in regards to interest rates change, we will see a direct impact on the price action. Moving over to the DXY, not all of them are change. Again, we do not expect any change here for the DXY until we move into these economic events. And with the S&P 500, once more, provided we are able to sustain above this 5,300 level, we are looking for continuations higher. Of course, potential influences of the upcoming interest rate decision and inflation data can massively skew the short-term or even macro price action, something we'll be discussing after the news releases. So without further ado, let's go ahead and jump into Bitcoin. A quick word from today's video sponsors before we do. Again, check them out for 15% off your trading fees. Support me, support the channel, and help yourself by getting that healthy discount. It will save you tens of thousands of dollars, up to 6 figures. I know it has saved myself well over 6 figures in the long run. Check it out and let's jump in. I'd like to introduce our partner, BitUnix. BitUnix is a global, non-KYC, no country restriction exchange, making it a perfect exchange to trade on if you're from the USA, from Canada, the Netherlands, or just prefer to trade without KYC. This exchange is a futures and spot exchange with over 200 different trading pairs and some of the lowest fees in the game. If you sign up with my link down below, you'll get access to 15% off your trading fees, as well as an exclusive reward center where you can claim up to a multitude in USDT prizes. So go ahead and sign up with my link down below for 15% off, and I'll see you in there. Okay team, let's go ahead and get into the crux of today's analysis, and we're going to be taking a look at the daily chart as well as the 3-day Gaussian channel, because the Gaussian channel on the 3-day particularly has a specific level of confluence we want to be discussing, and that is going to be, if we jump over to the 3-day chart really quickly and bring up the Gaussian channel, that is going to be the midline of the Gaussian channel. And I hope that you can see that on this blue background pretty well. If you can't, let's jump over to black background. You can see here that the midline of that Gaussian channel, the center level of the Gaussian channel, has been providing a degree of resistance now for the last 9 or so days. And in fact, we have got our 3-day candle closing in just 35 seconds. So we've had another failure to sustain above the midline. Now, this isn't necessarily a major bearish signal, but of course, until we break through a midline, it is unlikely that we push back to the range high of the Gaussian channel. Now, the interesting point of confluence is that the mid-level, the midline of the Gaussian channel is perfectly aligned, as you can see, with the dotted trend line on the higher time frame structural consolidation we know as a descending channel formation for Bitcoin. Now, we discussed in prior videos why this dotted trend line is so significant, and we're going to go over it in just a moment again. But if we move back to the Gaussian channel, we have to understand that the midline is generally going to be a pretty significant trigger point for Bitcoin's price action. We can see back in September, well, this is September, August, September, even October 2023, we've sustained below the midline for quite some time, most importantly, as well as sustaining above the lower band of the Gaussian channel. We finally broke through that midline and we saw a continuation above the Gaussian channel. So the reason I bring this up is because we are sitting between more or less a rock and a hard place. If we take a look at the Gaussian channel, the last time we really broke the Gaussian channel was going to be over here. And the reason I say this was going to be the last break of the Gaussian channel is because we were underneath the Gaussian channel and we broke the upper band of resistance. If we invert it, we are now above the Gaussian channel and we have yet to break the lower band of the resistance. This right here, this breakout from the bottom side and above the upper band of the Gaussian channel was what we would call a high time frame trend shift. According to the Gaussian channel, that is when the macro uptrend for Bitcoin started. And therefore, if we look at it from the flip side, if we were to break below the lower band of the Gaussian channel, we would run the risk of entering a high time frame downtrend. So, while we occupy the space between the lower band of the Gaussian channel and the midline of the Gaussian channel, that downside risk is still very, very present. Furthermore, if we are able to bounce from this lower band, which it does appear we are doing, and break through the midline, we will not only decrease the likelihood of entering that high time frame downtrend, but we will most likely increase the probability of a directional continuation much higher as a consequence of breaking through the mid-level of the descending channel formation. And now that brings us to this chart. So taking a look at the descending channel formation, knowing that that Gaussian channel midline sits basically exactly where this orange line is, sitting with the 200 SMA and the dotted trend line, we have 3 points of major confluence right in this level. We also know from a structural perspective, the prior times we have broken a daily candle above the dotted trend line, we have seen directional continuations to the range high. So for Bitcoin to see that next move upwards into that range high, into the high 60s, into the $70,000 region, we need to 100% get the price to sustain a daily close over around 61,600. That is absolutely paramount. Once more, while we sustain the price action within the descending channel formation, swings to the low side and the upper side, the range high and range low, are expected to be considerably normal price action. It is totally healthy. It is totally normal. The big issue is, as we discussed prior, the longer this consolidation goes for, the lower the total cryptocurrency market cap goes, because this is a downward consolidation, and the higher Bitcoin dominance goes. As we can see, Bitcoin dominance has gained around 7% in the time Bitcoin has basically moved dollar-wise absolutely nothing since it entered this channel, and that results in altcoins bleeding out significantly, which drags a lot of attention out of the cryptocurrency space, which makes the space quite dead. And that is basically what has been happening over the last 5 months. Sentiment, attention, engagement has all been decreasing, while Bitcoin has essentially done nothing. We're basically in the same spot we were in March 2024. So just around 4 or 5 months ago, we're literally exactly the same spot. So you can see how sometimes the price of the asset doesn't always control whether or not the market is hyped up or there's a lot of engagement in the space. Mostly it is due to the movement of the asset that draws a lot of attention and draws a lot of money into the markets. So taking a look at the price action, if we were to want to see that price move upwards, we need to close that daily candle above. We'll discuss that in just a moment on the short term. While we sustain underneath the midline, there is a risk we see the continuations lower. However, even if we see a continuation down to 54,000, we are technically still at an area of support. We've seen 4 bounces from this range low as of right now in the past 5 months. It is only if we drop a daily candle underneath the range low would we then invalidate the structure, which is this descending channel, and thus increase the probability of a high time frame downtrend. While we sustain that range low, the expectation is that we eventually see a directional continuation to the range high and eventually see a break towards the upside out of this macro consolidation. Once more, descending channel formations are bullish consolidations. Will it happen with absolute certainty? No. Nothing in the market is with absolute certainty. There are unknown risk factors that can drive the market. There are news events that can pop up that no one can predict. There are things that can happen that can move the market. But from a structural, theoretical perspective, this pattern is a bullish consolidation. And therefore, if we do see a break of the midline, we will be expecting a likely break of the range high if retested. Until then, of course, Bitcoin is underneath the midline and there is a risk we see those continuations. So let's now talk about what is happening right over here. Will Bitcoin go higher? Will Bitcoin go lower? So let's move over to our short term. As we can see, this is our short term price action. We've got some critical levels pinned in on the chart over here. Most importantly, I want to draw your eyes down to this region. This is going to be the $54,000 region. And you can see this is going to be our descending channel range low support at 54K. In fact, this is basically this range low support. So we can see very bearish below. And that is, of course, if we drop below this region, we will be officially breaking underneath the support level of the descending channel. Of course, if we break under, the chances that we close a daily candle under increases, and thus the chance of the invalidation of the structure significantly increases, and then the probability that we see directional continuation downward increases. So that is a very critical area of support. The next area of support we are looking at is going to be the area of which we are currently retesting around about this $58,000 region. If we go to a daily chart, you can see very, very small, if I go ahead and zoom in, that there is a very small support level right over here, represented by this gray box, which we did come down, and you can see we dipped into this region, and now we are bouncing. This region was going to be the daily low, the daily resistance, the daily support, and a daily breakthrough, now retest of the $58,000 region, which we retested, as you can see, numerous times upon the corrections towards the range lows. Now, I would like to go ahead and pinpoint every time we've closed a daily candle underneath this level, which is specifically 58.3, we have seen directional continuations to the range low. Okay, every time we close a daily candle under, we have seen these directional continuations, specifically these two, to the range low. So we do not want to close a daily candle under here. Once more, if we do close a daily candle under here, the probability we see directional continuations to 54K significantly increases. So as we said in yesterday's video, the most likely scenario would be that we enter the short-term downtrend towards our area of support, where we consolidate sideways and eventually see a continuation upwards. And that is still what we are expecting. We are expecting directional continuations upwards into our 200 SMA and our midline of resistance, now also the Gaussian channel 3-day resistance, the midline, okay? We are expecting these directional continuations upwards, provided our area of support here is able to sustain. If we drop below this support, then we expect continuations to 54K, okay? That is it. There is no need to overcomplicate it. That is pretty much all we're looking at right now. We are looking at our critical support and resistance levels. We are at support, we are bouncing some support, we are showing a degree of price sustain above the support, and we are showing some signs of absorption of that selling pressure. We are seeing the price action move back upwards. We are expecting that directional continuation provided this area of support holds, which we do have historical data to show the significance of holding this level. And we then are expecting that move to that high point to retest that midline once again. This is now when the risk comes in. Knowing that we have got some major economic releases coming up over the next 32 hours, this next 32-hour block, if we go to the short-term price action and we go ahead and draw out a 32-hour block, this 32-hour square from about 10 o'clock tonight, which is around about this region, into around 10 o'clock the following day, which is going to be around about this region over here. This is going to be our region of volatility. So we would expect, if any significant volatility were to occur, we would expect it to occur around about this region. So as you can see, we are approaching that region now. This is going to be when our economic releases come out. So I would avoid trading too much within this region unless the trend is abundantly clear and unless we are able to sustain this area of support, which as of right now, it does appear to be doing so. So this is our economic news release. I would be very cautious when we do approach this region, and cautious during this region, of course, depending on what those economic releases are, will significantly sway the short-term price action. As I say, as always, with economic news, there is absolutely zero way to be 100% sure what those releases are going to be. We know they are politically driven, we know they are to some degree manipulated, and we know the price massively reacts according to that data which is released. And unfortunately, as a retail trader, we only get access to that data at the same time, if not later, than everyone else in the market. So our decisions, our reactions, our actions are going to be at a lower degree of certainty. They're going to be at a higher degree of risk. And that, as I always say, I never trade economic releases because I simply am in a position of statistical disadvantage, and there's no need to risk your money in those environments. One of the best things you can do as an experienced trader is to slowly understand how to develop a system or even be able to read the charts well enough to identify when the climate you should be trading is in and when the climate you should kind of take that step backwards. Sometimes not making a decision, not making a trade is a trade in itself. If your decision is to not trade and that decision has resulted in you saving a potential loss, that decision to not trade was a fantastic decision. It was a great trade. And a lot of people are always expecting we should trade now, but sometimes taking a step back and actually saying, well, maybe I should not trade this event, or maybe I should not trade over the next 4 hours, can massively shift your win, not only your win rate, but your profitability as a trader. So don't feel like you need to go. That's not the game. The game is to spend as little time in the market as possible and get the most return as possible. Remember, the longer you're in your positions, the higher the risk is, because you're exposed to unknown risk factors such as random news events, such as market manipulation, such as unexplained volatility, etc., etc. So pay attention, have your wits about you. Moving into the economic news, I can't stress it enough. Be cautious, be aware. And if you don't feel comfortable, simply don't trade the news. You do not have to trade the news. No one is holding a gun to your head. It is 100% your decision. Personally, I think the news will slightly be leaning towards the neutral end, maybe slightly bearish, but I do believe that we are going to see those interest rate cuts sooner than later. And we've talked about how bullish that really is for the market. Moving over to this chart really quickly, I'll get you to screenshot this. You're going to screenshot it. The flow chart, which actually shows the exact mechanisms behind how falling interest rates positively affect the risk asset market, is right here. We're not going to discuss it, but we can talk about it many times before, and you can look at this and go over it yourself, and you can see how that benefits the risk asset market. So thanks for tuning in. Have a great day. We won't see you tomorrow, but we'll see you the day after. See you then.